Alright, great. So, you guys doing okay? I'm a bit sweaty after the game just now, even though I was not the one running around. But you guys okay? How's the temperature? Is it fine? Not too bad? Alright, cool. Alright, so moving on. Our main event for tonight. I'm first going to introduce you our local heroes for tonight. Can we please welcome Tan Man Yu, please come up on stage. Cool, alright. So next up, we have Loh Jun Hung. Come up on stage, please. Next up, Joshua Lee. Welcome on stage. And Hansen. Please come up. Alright, and our moderator for the evening. Please welcome Alex from Rise. Woo-hoo. Enjoy, guys.
Testing. Okay, hi there. So I'm Alex. I'll be moderating tonight's session. So before we start, I'm just gonna briefly run through you guys what the objective of today's panel discussion is. So the objective is that we're gonna help you guys by deconstructing the whole backend process that investors go through when it comes to seeking for new ventures. So hopefully what we're gonna get out of this is the best practices that you guys should be applying when it comes to approaching investors. So before we carry on, I'm going to be introducing our panelists and they'll be speaking a little bit about themselves and what they do. So, first up. Okay, so first up, I'll be introducing to you guys to Ban Yu. He is the director of Offpeak.my. But other than that, he is also a co-investor in Carlist.my, who got acquired by Capture Media and is now worth tons of money. So please give it up for Ban Yu.
Yeah, Carlist has tons of money, but not me. Okay, do we have a slide? Okay, just a short description about me. You saw a very nice picture of me that just now, but this is actually what I truly look like. And just about a very short description about the journey of how and what I've been. I actually started a software house back in 2002. So I've been in business for almost 13 years right now. And they always say that I started off in a very good start because I actually failed my first business. That's why there's a big boom there. And I started another company in 2003, which is actually called Red Tone, which I actually then sold it off at 2008. And subsequent to that, having some money, I've invested in like some Vietnam business and a pet business, which then I failed again. So a journey of an entrepreneur or investor, you do go through some failures and success at some point of your time. And of course, I then found great success in Carlist, which I started immediately after the other two more business. And we've built it up for about 3 years before we then sold it off to Catch Up Media. And it's now called iCar and listed in the Australian Stock Exchange. And from then on, I actually didn't want to go back into the web business. I thought the web business was really too risky, too fast-paced. I'm getting old, I better go and do something that is more down to earth and more traditional. And I went back into the traditional business of building properties and also running a CCTV company. And just as of last year, I got my hands into the web business again because I was offered a very good idea and we decided to then pump in some money and to build it up again. So right now, Offpeak has been launched for about 6 months. You can actually download the app today, hashtag no shame, hashtag just launched. And that's where I am today. So I have these 3 business and it's all running in concurrent at the moment.
Alright, thank you, Ban Yu. So next up, I'd like to introduce Mr. Lok. So Mr. Lok is the treasurer of MBAN, which stands for Malaysian Business Angel Network. So please give it up for Mr. Lok.
Yeah, good evening, everybody. My name is Lok. I'm actually a patent lawyer, but I'm not here to talk about patent. I'm talking about MBank, of which I'm the treasurer. I'm here to briefly describe what MBank is about and what does it do. In an active startup ecosystem, we need two players. One will be the leaders, the entrepreneurs. We have a lot of entrepreneurs in the room. And the other players we need is the feeders. The feeders are, government agencies, banks, funding, angels investors, and those that provide a framework to support the angels to excel and to succeed. And this is what angels investors and banks trying to achieve. For a typical startup, they will go through many stages of development, from ideation to prototype development to commercialization to growth to maturity. And at the early stage, at the prototype development and commercialization stage, a lot of funding, a lot of support is required. So at the moment, the government is providing grant, but the grant is shrinking. As we all know, the government is taking back grants, and by in 2017, maybe most of the grant will be gone. And where do the startup go? The startup can go to banks, but the banks are looking for traditional collaterals, something to be used as securities. So startup may not fit the bill. And you also in Malaysia, we don't have a lot of VCs. We have about 10 VCs in Malaysia, but they are all investing in the more later stage companies. So there's a need to have more angel investors to participate or to bridge the funding gaps. And angels investors, we are referring to private investors, individuals, okay, and they invest not only money but network and also experience to help the startup to move to the next stage. This is what the angels brings to the table: knowledge, network, and capital. And usually, angels will come in at the early stage, at the beginning, where the company is starting to break even. And statistics have shown that angel-funded companies are able to survive longer, and they are able to benefit from networking and mentoring. And I would like to. These are some of the successfully angel-backed ventures. And in Malaysia, we have, according to statistics, we have about 39,000 individuals with net asset of more than $1 million, and high net worth earner, high income earners. There are about 40,000 individuals who have 180,000 per annum income, and these are the members of MBanks. To be a qualified angel investors, you have to have a certain asset level to become accredited members. And how do we come about? The idea was mooted way back in 2012 during one of these Asian Business Angels Forum. And in 2013, a bill was passed to introduce the Angels Tax Incentive to encourage more private money to come to become an angel to invest in startup. The government has come up with Angel Tax Incentive to be managed by ATO. And in order to benefit from this tax incentive, and investors will have to be accredited under MBank and become a member of MBank. And currently we are successfully registered as an association this year, 2014, and currently we have about 77 members. And we aspire to become a platform for high net worth individuals and high income earners to come together as a trade association and to capitalize on the tax incentive offered by the government and to invest into potential startup. And this is a tax incentive. I'm reminded about my time. This is a tax incentive the government is offering. And currently, I can answer some of these questions later, but suffice to say that currently we have about 77 members, and many of us are direct members and also members through Angels Club. Currently we have about 4 or 5 Angels Club under MBank. So what we do here is we welcome any good proposals, and we can share it with the members that we have, and hopefully there will be interested members who can invest and at the same time benefit from the tax incentive offered by the government. That's what I can say for now. Thank you.
All right, thank you, Mr. Loh. So next up, I would like to introduce you guys to Joseph, who is the director of Infinite Ventures, a youth-based venture building fund. So to speak more about that, please give it up for Joseph.
Hi guys. So I was involved in the Melbourne startup scene for a few years. Prior to this, I just got back literally 2 weeks ago. But we started setting up Infinite Ventures, which is a pre-seed fund to invest in startups in Malaysia. So where we leave off is where angels usually pick up. So angels usually get in when startups start breaking even, but where we come in is right at the beginning, at the ideation stage. Not generalizing, but angels usually come in at the break-even point. So we sort of deal flow towards the angels. So if you guys are interested in anything before break-even point, come talk to me after this. And we are not youth specific. It's not like purely mandated to be youth specific. So like it can be anyone. Our investment thesis is that we believe in execution. Ideas are pretty cheap. So that's a short intro, I guess, of me.
Alright, thank you, Joseph. So next up, I'd like to introduce you guys to Hansen. So Hansen is the head of product and online marketing analytics at Jobs Street. However, he also has his own startup called Serviceflix.my, and he also invests in a couple of things before. So to speak more about himself, please give it up for Hansen.
Hi everyone, good evening. Thanks for taking the time out from your busy schedules to be here amidst coming Chinese New Year and all that. So yeah, I'll go to more detail maybe later on, but yeah, so Alex, your introduction. So my day job, I have a day job, right? Just like, probably a lot of you here. I work at Jobs Street, and I head the product and also the online marketing and analytics team. I also have a night job, which is where I work closely with startups. I love the tech scene, I love the startup community. So, and I feel that, sometimes you don't need to be sort of waiting until you're 70 years old and you're retired to basically give back to a particular sector. So, I'll talk more later on. Thanks.
Alright, thank you, Hansen. So we're now kicking off the panel question section. Again, if you guys have, we'll be holding a short Q&A session at the end of the event. So if you guys have any questions that you guys might think of throughout this whole panel, please keep it to the end, and then we will answer everyone's questions if we have time. So I would like to start with my question for everyone. So it's a common assumption that investors are hard to approach and even harder to find. So how can one look for investors, and what should businesses prepare themselves with before approaching one?
Hi. Actually, I want to put a different perspective of this particular topic, funding the dreams. I think actually a lot of you here actually have the experience to actually already approach investors. Let me try to turn it a little bit and ask you two simple questions. How many one of you here in the room has actually approached an angel investor or a funder or VC before? How many of y'all? Very few. How many of y'all have actually dated a girl or a guy before? It's a serious question. Yes. How many? None of y'all dated? I don't think IT was so boring, right? So I think majority of y'all have actually dated before. And dating and finding an investor is actually quite similar. And I hope by the end of this session, I will be able to formulate the similarities between the both, and maybe and hopefully make you think or be a little bit more brave into finding your next investor. And maybe the topic would then be finding the dream date instead of just funding the dream. So I will try to spin my story around that. So back to the question that Alex has thrown, how do you actually start to find an investor? Just like dating, it's the same. You know, you have to go out there and just meet them. You know, you go to clubs, you go to parties, you ask your friends to introduce another friend, you go to events like this, you go to gatherings. It's the same thing. In order for you to first meet the VCs, you have to know and actually go out and meet them. And how do you actually go out and meet them? By finding them in those places, finding them, making appointments with them, sending them a message in Facebook, asking your friend if they know another friend. You know, and we see it's exactly the same as how you would date a girl or a guy. Or you want to find out about somebody, go and search for them, go for events, go for parties, go for gatherings. That, to me, is, I think, the first step of how you actually find a VC.
Yeah, I agree with Banyu that going to forums where you can find investors is important. But at the same time, I think the entrepreneurs, the startup company, would have to, in order to sell the dreams, you have to convince the investors. So there are some basic things that you have to have in place before you can convince the investors. I think what is important is some of the things that investors look at is you have to convince the investor that you really have a good product, a product that can solve a serious problem for consumers who are willing to pay for it. That's very important. A technology that potentially can gain a big market share. You have to convince the investors that you have a team that can deliver. In fact, you're talking about dream, and to deliver a dream, it's the people that deliver the dream. So what's your track record? These are extremely important. In fact, from our experience, the team is the most important factor in any startup investment. The other thing is the market, how big the market, your market can be. Is it a growing market? And of course, the profit, how much profit you can make. Taking into account, if you look at statistics, maybe 2 or 3 out of 10 businesses will survive. So naturally, the investors are very risk adverse. They don't want to burn their money. Once the money is invested, it's considered out of their control. So you have to convince the investor, go to the right forum and sell your rights, sell your story to convince. I think that's what I can say for now.
I think the problem in Malaysia is not the sourcing of the investors. So MBAN, for example, you've got access to 70 plus or so investors, angels, and you've got plenty other platforms out there. So online, like Capital.my or whatnot. And you've got all these kinds of events, such as this event, where lots of angels secretly hang out somewhere. And so the sourcing is not the problem, rather it's the approach. So personally, I've gone through thousands of pitches that were emailed to me, and a lot of them just can't make it. But what I do look at is the recommendations that come along with these emails. So if I know someone within the scene that's credible, and the email is sent by this credible person, or the credible person is CC'd into the email, for example, that adds a lot of credibility. Also, the third thing that I want to point out is that you've got to, if you want to source for investors for a particular product or startup, it's very case specific. So you've got to check out what this angel's interested in, what his or her investment thesis is, whether they do, like, for example, hardware or software startups and all that kind of stuff. So the sourcing is pretty awesome, I think. It's rather the approach, in my opinion, in the Malaysian context.
So I echo very similar thoughts to my fellow panelists. In terms of looking for angel investors, I'm not sure if I think angel investors are that easy to find. I mean, you said they're easy to find. I think because we've been maybe we've been doing this for a while. We know where they are. We attend the events. So if I throw it back to you, by that same token, there's a lot of tools that you have nowadays that maybe if you look back, maybe 5-10 years ago you didn't have. So obviously you're familiar with this website. What's it called? Facebook, right? Yeah. So Facebook is there. You've got LinkedIn, right? You've got a whole bunch of other possible networking sites you can use. There's also other one website called Google, right? And if you just go in and type in Angel Investors Malaysia, you probably can come up with some content. So I think finding like what Joseph said, and also my other fellow panelists, is about sourcing them, right? And if you can, sort of understand, hey, what kind of investor suits your profile and vice versa, right? And then after that, of course, the approach that you have, as Luke said, work on your dating pitch, right? What is it that makes you special? But I also think it's an iterative process. Sometimes if you don't try, you don't know, right? And so what you may do is, if you're not sure, you target the, you try a few. You talk to some investors, talk to some angel investors, learn, make some mistakes, never mind, right? So you work your way up. You target sort of maybe the investor that you least want first. You're going to talk to him, you learn. Maybe you might insult him a bit, or he might insult you, that's fine. And then you learn, you iterate, you talk to the next one. By the time you reach the third one, fourth one, you get pretty good at it. That's one thought I have. Just to answer that question.
Alright, so my next question for everyone again is, what are some of the common mistakes that you guys see people do when it comes to approaching funding? When you're approaching investors, what is the one thing you see that if they do, you're confirm not going to give them funding on? So can you just share with us like some experiences that you guys had before? Would Joshua like to start? You seem like have something to say.
First thing is, don't ask any investor to sign an NDA, a non-disclosure agreement. That's like straight away, okay, nah, that's alright. There's like 100 other startups or ideas that will approach me. It's exactly the same as yours. But in all honesty, an NDA, nah, never do that. Besides that, you've got to give like a huge approach towards like analyzing the particular investor. So what's his investment thesis and everything, and you go about that approach by talking in his own language. So I keep referencing like software and hardware because that's the easiest example. So if you go to the wrong investor, then that's straight away a no-no. And also, I mean, in general, it's very case specific towards the investment itself that goes into the decision making. So what stage of funding is required for a particular startup, for example? If you come to me as a pre-seed funder at the Series A level, obviously that's out. And I think that's a really I mean, it's pretty obvious, but a lot of people make this kind of mistake. So they just cold email everyone out, and then like any meeting they get, they will just like go for it. So I think these are a few of the mistakes that I've seen quite a bit. Also, the design of the pitch deck, just make it simple. I've seen like, this is very general stuff, but I've seen like too many pictures and not enough words and information. The pitch deck which you email to an investor should be a different pitch deck than the one that you present in front of a crowd, because it should contain more information. A lot of people just email the presentation pitch deck, which, yeah, how would you assess an investment with just pictures? I think that's pretty much it for me.
All right. But you perhaps have something to add?
I like the NDA one because I actually read it somewhere to say that the top 5 things not to do when approaching an investor is actually to sign the NDA, because like he mentioned, there's a lot of other people that will go ahead without signing the NDA. And I think the other thing that was mentioned is finding the right investor. I think that is the key in talking to an investor. It's like finding the right date for you. You know, every investors operate differently. Like some people operate in the Series A level, some people operate in the Series B level, some people operate in a pre-seed level. But other than that, there's a lot of things that other people operate in that are very, very specific to them. Some people are very good at just say manufacturing, or some people are very good at IT or web business. And even then, it's also then broken down into other kinds of investors. Because we have met investors which the first thing they ask you is, what's your revenue? Everything you state is about the revenue, okay? And there are other investors who ask you a different question, what are your numbers? You know, so depending on what you want to go for and what investor you want to go to, you have to find the right fit for you. Somebody who matches you to your requirement of what you want. There are the right kind of investors out there. You just have to go and, like Hanson said, go and find a few. The first one, the second one, it's just like dating. You're not probably going to get it right the first time. But the more you date, the more you know what you want, and the more you will be able to find somebody that's more suitable for you. So coming back to that same philosophy, it's the same. You have to find the investors that is right for you. Talk the same language as you. Want the same thing as you do. If you are the type of company who's just say a manufacturing company and you want to grow it to just say Malaysia, and this other company that you approach, the VC that approaches you or you approach says, no, you need to go nationwide. They have that mindset in place. Or if you are a company that says, look, I just want to get numbers. You know, like Carlys is a very number-driven company. It's not about the revenue. We had very little revenue, but we went to the right investor. Also happened the right investor dated us. You know, they were looking for the numbers. Because at the time when we sold the company, we had 40,000 visitors a day to our site. We had zero revenue. So the right investor came and approached us and offered us something on the table. But not every investor is going to look at the business and says, oh, fine, you got 40,000 visitors a day, you are worth this much, I'm going to invest in you. There are investors that will look at your business and says, you have no revenue, don't talk to me. You haven't proven your business model yet. So that's why I said finding the right investors is very important. And things not to do, I think has already been shared. It's more or less the same. Don't do the NDA thing. Send out 2 different decks. You know, don't send out the decks that is like not complete. Don't send out something that looks like it's done by a standard 5-year-old kid. You know, send something that's precise, it's concise. You can actually translate the information within 4 or 5 slides to understand what is it. You don't have to go through one whole long story for them to understand it. So I think these are pretty much similar things that what you should do in finding the investors and what you shouldn't do.
Do you have any?
Yeah, I pretty much echo what they want to say, but I don't quite agree about the NDA part because, I come from the IP background. So you don't want to share your IP away, So there must be some protection in place, or at least don't give everything away, because you don't want your idea to slip away so easily to, other people. But I guess some balance has to be struck somewhere. Where you don't keep your gist, but you don't tell everything, but at the same time, you don't insist too much on the NDA. So I don't know how you're going to do it.
I think it's yours. Okay. You want to say anything? Pretty similar.
Very similar. Okay. So next up, I just want to ask this question. So, how do you guys evaluate how much a business is worth before you guys actually invest in it? Is there a particular criteria? What is it you guys are looking for when you're placing a number on that business? Would anyone like to start?
Just from experience from my 2 companies, I call it the finger to air tactic. And what the finger air tactic means, you basically lick your finger and just feel the air. That was actually how both my companies was invested the first round. Redtone, when they approached us, it was that as well. It was a number that they threw that we were comfortable with, and we went ahead with the sale of that number. Carlys was a very interesting story. I remember receiving a call from my founder at about 6 o'clock, and he says, hey, look, we've got a very good offer on the table. Catch Up Media offered us $5 million to take Carlys off our hands, 70% of Carlys off our hands, basically all the investors. And at that time, we were actually deliberating whether we want to sell or not, because we just got the cradle fund, we just started to charge the second-hand car dealers, and there was some revenue trickling in. And just off the back of my head, I just said, okay, fine, go back and tell Patrick, 10 million we sell. And then at 8 p.m. the same day, that means 2 hours later, we received a call and say 10 million done deal. So that was exactly how it happened. It was really just a feel, and a number that we throw, and we got the investment. That is exactly how it is. And the other form of investment that I myself have gone into, for example, like Offpeak, the one that I've just invested in as well. That one, of course, is a more structured approach. But at the end of the day, investing in startup is something that is going to be very risky. When I invested in Carlist for the first time as well, I was actually cheated into it, because I was new. I haven't invested in any web business before, and everybody had a presumption that web business is very cheap to build up. 50,000 you can build up a business already, no problem. So when the owner came to me and said, okay, all I need is 500,000, okay, and we've got a pool of 7 people in investing in that, that's all I need. Once you're in it, then you can't come out already. 1 year after that, he came back and said, look, we have got not enough, we need another 500,000 more. And we did that, and we invested in another 500,000 more. And then the third year came, and then he said, we need another 500,000 more. So that's why I always say we got cheated into it, but at the end of the day, we also managed to get a good deal out of it as well. So the numbers, to me, is very subjective in terms of how much to evaluate your company and how much to actually sell it for. Of course, if it's a traditional business, then it's very easy to calculate, because you've got your PE ratio, you've got your net book value, and all this to calculate. For a web business, it's very, to me, I still think it's very generic. It's very up in the air. So it's really a comfortability level between you and the investor. What is the right amount? And of course, when you ask for a certain amount from the investor, you really need to know what you want to use it for. Because I've been to a lot of talks, and the people there ask, oh, how much do you want to be invested? Oh, I want 1 million or 10 million. Why 10 million? Oh, because Facebook is valued at 1 billion. So I just want 1% of that. So 10 million. But they don't exactly know what they want to use it for. So if you can actually pen down what you want to use it for, put down exactly what your cost is for, your employers, your rental, your what you're going to spend on marketing and everything, then at least that makes the basis of what is going to be evaluated. But at the end of the day, it's still going to be a guessing game. It's still going to be a comfortability level game. That is just from my experience. Maybe the rest can share something from their experience as well.
Sorry. Subconsciously, I reached for the mic. I didn't even realize. Sorry. So yeah, the question, just to repeat again, the question was, what kind of revenues do we look for? Is it?
Yeah, like how do you determine? Yeah, how would you evaluate?
Right. Okay. So just for the record, I mean, basically, I'm an angel investor in a startup called Table App. And again, for the record, Table App and Offpeak, there are similarities in how we kind of offer the segment, right? Table App is basically on, it's a mobile app for table restaurant reservations, right? And how I got to know Table App was I mentor through the Coach and Grow program, which is a program parked under Cradle, right? So I was one of the mentors to Table App, and alongside a few other startups as well, right? And with Table App, I got to know the founder relatively early. So it was a case of, okay, hey, this guy's pretty bright, huh? The product, it needs work, but he's a good guy. He's willing to work hard, and he's got a small but good team with him. And then sort of as you start to trickle on, the business starts to grow, and then you realize, okay, so you don't know what the end projection revenue will be, but you kind of as I think Lok mentioned, you also invest. You believe in the startup, you believe in the founder and his team. So I think that helps you to kind of, as Banyu said, do the finger testing thing, right? You also start to look at, comparables. Are there comparables in the market? And in some cases, it's very hard because there aren't many, comparable companies. So you start to look at US, look at other regions, maybe closer to, to this region, maybe Australia, Singapore, Hong Kong. You kind of look at comparables, say, hey, you know, how much are they value? Well, in US, typically, you kind of discount it a lot because US valuations are quite crazy, right? So that's one way to do it. And then you do the reverse, like what you mentioned, the kind of money that startups are asking for, right? What do you want it for? Are you able to kind of justify, you know, every ringgit, you know, I want to use this money for that. So you kind of work the supply side and the demand side, you know, so you kind of make sure that the numbers kind of match, or at least they're not too far off. And, you know, again, whether you want to see revenues at this stage or you want to see growth, it's hard to tell. So you know, different kind of companies, different kind of industries expect different things. So yeah, I think that's my answer. I think you bet a lot on the team, to be honest, and the vision that, you know, that they have, and also along the way, you know, you also hope that or you target basically for, you know, different individuals to come in and also, you know, grow the team.
I think both of you already nailed pretty much all the points. Just one thing to add. Usually, right at the beginning, or when a startup cannot be valued by its cash flows, its free cash flows, or any other metric, it's good to use a convertible note, which is something where the valuation is decided later on. I'm not sure how financially literate this crowd is. Does anyone know what a convertible note is? Okay, so basically, an investor will pump money in, and then the following round, where another investor comes in, the valuation will be decided then, when there is more information, when there's more like numbers to go about it. Like you can actually, supposing it is a cash business, you can actually do like a valuation, and then from there, the previous investor can convert that amount which he invested in into equity at that stage. So that's something to consider. But yeah, I think I just want to add that.
Not much Asia policy. I mean, generally, it's not really. Do you know of any convertible notes? I'm doing it.
It's the new way that people are doing the investment. The valuation is decided much later. Yeah, that's all I know about it. I don't invest that way.
Probably I would like to add a little bit. I think what you are referring to as convertible note will be the VC method of valuation. So you know, what they do is, the VC, when they want to buy a company, they have a value in mind. Maybe in 5 years' time, they think they can sell at certain value, and they want, let's say, 5 million, and they have an intention to have a 10x return. So now they will 10x of 5 million. Okay, of course, 5 million in 5 million in 5 years. You have to discount to today's value. Okay, today's value is worth how much? And from that today's value, you need a 10x return. So 10x return, let's say discount to today's value is 4 million. So 10x value, the company is worth maybe 400,000. So I'm going to put in 400,000 as your valuation and see how much money you need. So I put, let's say 200,000, then I'll take 50% of the company. That's basically what the VC is doing for valuation of a company with no track record. You don't know really how much this company can sell or can make in years to come. It's just a projection. But there are also other types of valuation, like for example, it can be a comparable PE. Some of the startup may start, may have been making some money already. So maybe, you make 1 million and I want 10 PE, so I want to sell for 10 million, and you can compare that to the market. Probably, some of the investors may want to buy that. There may be a cost approach to it, like for example, over the years I've spent so much, so the cost that I spend is so much. So now I need more money to grow, so probably I need a percentage. I use my cost that I spend as the value of my company now, add a little bit of goodwill. So there's a lot of different approaches, and at the end of the day is whether the buyer or the investor is comfortable. It's like very much like what Ban Yu say, but there are certain metrics that different investors are using. So that's what I can add for now.
All right, thank you for that. So another question I'd like to open up to everyone is that how involved should an investor be with any of the businesses that they invest in, and why? So the question is, how involved should an investor be with the businesses that they invested in, and why?
I think that question is a matter of preference. Different investors invest, some people invest just to invest money, and some people invest their time as well. I'm more of what we call a passionate investor, where when I invest in something, I would want to be involved in the building up of the business as well, because I actually enjoy the journey that the particular company goes through, whether it's up or down. I would like to actually enjoy that together with them as well. So I'm not the typical type of person who will invest in like 10 companies and then let the operational people or let the team people do it. I'm the type that are very selected of what I invest, and invest in very little companies, but every company that I invest in, I actually have, I will actually be with the company, you know, through their operations, through their decision making, and through most of their ups and downs as well. Because like I said, I think the story and the journey of the companies is what interests me more often than the end result of the company. If it makes money, of course, I'm even more delighted. But if it doesn't make money, at the end of the day, it's the journey that I carry with me, and the stories that I carry with me with the companies that I actually treasure as an investor. So that's my preference of investing in companies. So it's not the number of companies that's available, it's what I would be able to contribute in each of the company.
I think there are two parts. I mean, for me, I think there are two parts to this answer. The first one is if you reason through analogy, different funds, I'm talking from a venture capital perspective here. So different types of funds invest differently. So for example, 500 startups, they invest in like hundreds of startups. In that sense, the partners do not have enough time, and they expect that the startups are like completely independent. On the other side of the spectrum, there's going to be venture builders and buyout firms where they acquire a large stake in a company and then like they take a super active role in it. So that's the first half. If you want anything in between that spectrum, you can have a look at it. So the more startups they invest in, the less the investor is active in it. The second part of the answer would be if you reason through first principles. And by that, I mean an investor will look at the team. If the team is inexperienced, they will take a more active role in it if they really believe in the idea and all that kind of stuff. So the team is only one factor in the formula of whether an investor decides to invest. And that level of experience, for example, is another factor that an investor takes into account when deciding how active he or she wants to be in that particular investment. So two parts to this answer.
Actually, it's a funny asset class. You put in money, and then you have to work hard at it some more. You have to spend time and spend a lot of, possibly you spend nights, weekends working with a startup. So if you ask me, is it a good asset class? I don't know. Sometimes I also struggle. It's like, you invest money, and then you have to work with them some more. And you do it because, you're passionate. I mean, in Banju's case, he does it because he's passionate. Likewise, I'm also like that. I do sort of work with startups that I feel I can identify with. Some of them, and it's not, they don't just, you don't just know them just for maybe the last few weeks. In some cases, sometimes it's a bit like dating, a little bit. Or, you've maybe known someone for a while, you know what they're like, and then at some point when something happens, then you feel better about, putting in time and money with them. I mean, it makes sense, right? It's like if you just met someone, how are you going to invest that kind of time and effort with them? So the question again was?
Okay, to repeat, the question is how involved should an investor be?
Yes, how involved should they be? There are several types, like Banju, a bit maybe like myself, very much we spend a lot of time with the startups, that we work with. There's also, the kind of the VC firms generally, and they're kind of spread more thinly. But I think the question more, maybe if I throw it back to, you as an entrepreneur, is what kind of investor do you need, right? If you if, for example, if you're the food industry, right, and you need support, you need advice and mentoring, from somebody who's in that industry, then you don't want to find sort of like the one who gives you a very thin layer of support. You want to know someone maybe who's been in the industry for a number of years, or particular whatever sector it is, right, so that he or she can give you a lot of hand holding. At the same time, maybe if you're at a stage where it's like, hey, I don't really need a lot of involvement. I just need him because I need his money, his or her money, or his team's money. I need the brand. For example, if you approach, I think for example, Li Ka-shing. Li Ka-shing has investments all around as well. Met some of them, and you don't expect a whole lot of hand holding from Li Ka-shing. Right, but what he has is a good network of other people that he can connect you with. He can help you to get meetings, get introductions, get networks done. People like, for example, even Mark Chang from JobStreet, right? He may or may not be very involved, right? But he's got a good network of people who he can tap on over the years. So it sort of comes back to you, like you look at your own business. What do you need? And you maybe need a few different types of investors / advisors to make it happen. So, but yeah.
I want to add a little bit. Usually, angels investors will not invest more than 50%. Usually, it's about 30% of a company. So, legally speaking, he has no control over the company. Majority shareholders will still be the entrepreneurs. So, it's usually very risky, for investors to put their money into a company that they can't control, because virtually the money once you invest in is at the mercy of the entrepreneurs. So usually clubs like us, actually I belong to the IPO, the IP chapter of the MBank, where we look at IP owners, and we have a framework where we have to be very, very careful. When we do evaluations of company, we have to be very careful. Usually we have among our members people who are familiar with the industry to actually do the evaluation before they champion it to the other investors to co-invest. We don't invest in one, but syndicate together, maybe 5, maybe 6 together. And when we invest, that industrial champion is going to be in the board of the company. So he's going to understand what is happening, and he will be involved, but not in the control sense, but more in the sharing, a lot of network experience sharing. That's what we try to do now, to minimize the risk for the investor, but at the same time to be contributing to the growth of the startup companies. We have experience where angel investor wants to come in and hold majority, and that's the end of the business. Once the entrepreneur lose control, they are not going to run the business. And this ended up the investor become the managing director of the company. So that's not what the spirit of angel investment also. So it's a minority position, but at the same time, because it's a hard-earned money, we would like to make sure that the money don't get burned. So we want to be involved to make it successful, and at the same time, contribute the experience and networking that the angel investor can bring to the table. And that is precisely why angel investor is very important. In any startup ecosystem, if you look at US, if you look at Europe, in US you have about 280,000 angel investors investing in 500,000 company every year, and from there you have successful company coming out. So they have to be involved. It's not just you go to the bank and borrow money, but it's but not controlling the company.
All right, thank you. So the next question I'd like to open up is that for everyone is, what businesses are you guys currently investing in right now? Like what particular industry or sector, if you guys don't mind disclosing, and why? What's the reason you invested in them? Is it because you like the team, or is it you're looking at how favorable that particular industry is? Would Hanson like to start with that?
So I mentioned just now about Table App, right? So that's one investment I've got. The other, I've got in total about four startups that I've invested in, right? The other two are currently sort of relatively early stage. I'll talk about them maybe separately. We can chat later on. The other one which I'm looking at which is very interesting, which is in the area of cryptocurrencies. And cryptocurrencies, I suppose basically if you're familiar with, Bitcoins and all that, right? So, Bitcoin, Dogecoin, Litecoin, those are all different forms of, coin currencies coming out. But if you go sort of a few layers down, it's basically a whole technology stack or whole platform stack that you have. And if you sort of, go further down, the names become a little bit less common, but they're by no means less important, right? So I'm kind of, exploring those areas. There are a few companies in the region that are doing that. And also, I think maybe related to the earlier question, how much passion do you put in as an angel investor or as an advisor? You look at the startup and they look at you, they say, hey, how can you add value? Because they're also interviewing us just as we're interviewing them, so to speak, right? And in some cases, maybe some companies are very heavy tech. They've got a great product or they've got the potential to have a great product, but maybe they don't know too much about the marketing side. They don't know too much about how partnerships can help them to scale, things like that. So if we see a good fit, then go for that. So I have a certain passion, more to, interest and expertise more towards consumer internet, right? But occasionally the enterprise side comes up pretty interesting as well. Cryptocurrency, I don't know whether it's it's a consumer or whether it's enterprise, but I do know it's a platform, right? So that counts for me.
So at Infinite Ventures, we currently invested in 5 companies, and these 5 companies are quite a broad range of areas. So we have one hardware, one social media, an API for crowdsourcing. So our investment thesis at Infinite Ventures is that we invest in execution and we invest in the team. It doesn't really matter what the idea is. If you think you're really good, then we're going to go in with you. But we invest between 50 to 100. So that's a bit of a limitation for, say, for example, if you want to go into clean energy or something, a really capital expense heavy kind of industry. So that would be what we're looking for. And besides that, we have partners that help out. Like for example, in the marketing sector or in the legal department or even in the technical sector. So if you're lacking any one of these things, we have partners to back you up, and so you have to be really good at executing what you are good at. So it's a specialty. So if you're good in tech, then we'll help you out in the business side of things. But that would be our investment thesis. The idea is pretty broad.
Yeah, in MBank we have different chapters of Angels Club. So, for example, I represent the IP chapter. So we invest in IP owners, companies that come up with new invention, new technologies which are patented. There's also another chapter under PCOM who invests in the ICT related product. We have the Coffee Angels that I think they invest more in the the consumer side of business. So we have different chapters. So you have interest, you can come to the association. We probably direct you to the right club for investment. That's what it's a very diverse group of investors.
I have invested in, I think, about 8 ventures in total, and they all range very differently. I'm an IT graduate, but the funny thing is the current 2 biggest ventures that I'm in are not IT related at all. I am invested in a property development business, a very boring business, or they always say traditional business, and also a CCTV and a security business. So that is my bread and butter, because startup companies don't pay me anything at all. So I need something to at least hang on to. And I'm now invested in this company called Offpeak.my. It has just been launched for about 6 months. We launched our Android app just of today. And it actually is a platform that allows you to actually get offers on your restaurants every time, every day, anytime. So what happens is when you download the app, you can actually tell you what restaurants is nearby that you can book on the spot and to have your offers immediately. So that is what we are trying to do in the food industry and trying to change. Actually, we are not even trying to change. We are actually trying to fit how consumers like you all think about food. When you think about food, you don't think about food of what you want to eat in 1 week's time. You think about food of what you want to eat in 10 minutes time or in 20 minutes time. And that's exactly what the platform allows and enables you to do. The moment you're with your group of friends, the first question always pops up, and it pops up every day in your life, whether it's with your girlfriend, or whether it's your colleague, or whether it's your family. What is that question? Sigmat, what do you want to eat? Where to eat? You know? So what we have done is we have created an application and a platform that answers that question in an instance. So the moment you turn on the app, it will tell you exactly what restaurant around you is having a promotion and offer at the time. So imagine if I tell you that my elephant is having 50% off and you can book it now. That changes the way you think about food. And most of the time, we are actually not too concerned of what we eat. If it's a good offer, if it's a reputable restaurant, we go for it. So that platform has just, we've launched it for 6 months. We have got about 230 to 240 restaurants. And the list is growing every day. So that business, when it came to me at the time, after Carly's, I told you I didn't want to go into the tech sector already. It was very kiasu of the tech sector already, you know, because of so much uncertainty and valuation and everything. So we didn't know how we could either replicate another business model like that. But having said that, like I say, I'm a passionate person. So sometimes I invest based on heart. So if somebody tells me something and then I like it, but I actually have no basis of why I like it. It's just so happened I like it, you know. And then I invest in it, and I put my money in it, and that's it, you know. So that is then that made me go back into the tech sector again. If not, then I would still be running more traditional or what they call boring businesses.
All right. So, next question I'd like to open is, from an investor's point of view, what do you guys think are the trending businesses or industries that are attracting a lot of attention from investors right now? Any takers?
You see a lot of businesses.
Probably you would like to start, Mr. Lok.
Anything that okay, sorry. Anything that has, as I mentioned, I don't think we are focusing on any trend. We look at the product. Is it a good product or services that really solve a real problem for the consumer who can actually pay, and the market is big and expanding, something you can scale. You know, those are the things that we look at. But not in specifically in any area, because again, we come from so many different types of investors, different fields, so we don't actually do trend. But for my chapter, we look at IP as one of the criteria. You must have some form of IP so that, you know, we can do some control if there's any breakdown of the relationship.
Trends. I think predicting a trend is like buying a lottery. You never know what is the next trend, you know, and trend come and go in a very short period of time. So usually I don't really focus on what's the current trending thing. Maybe Look here has more information because he sees a lot more VCs and he can probably predict the trend. But like I said, my investment criteria is always about the team, the passion of the business, whether the business is something that just, like I say, I just like it, you know. And all the businesses that I did, even for Carly's, it wasn't an idea that I came up by myself. I was actually approached by a friend who shared with me an idea. And both businesses, whether it was Carly's or Offbeat, we actually struck it in a Mamak store. And we struck it within 5 minutes. Sat down in the Mamak store, he showed me the business plan, and I just invested. Same goes for Offbeat, but it was in a dim sum store, so different, higher class a bit. But it's the same. I don't know the trend. You know, I can't predict a trend. Like I say, if I can predict a trend, it's like I'm telling you that I can predict a four-digit lottery number. You know, so it's still a lot of guesswork. I mean, for me, there might be a way to do it, and maybe they can share with you. But for me, it's really about just the idea of the business. I like it. I'm very passionate about it. I think that the idea works. Maybe it's a combination of gut feeling, sometimes a combination of experience that makes you make the decision on the spot and says, okay, let's go for it.
So within the B2C, which is business to consumer market, I think two things that come to mind. The first thing is the Internet of Things. that a lot of research and development is being front-loaded and has been front-loaded for the past 3 years, especially in Silicon Valley, about the Internet of Things, which basically means that you are linking hardware or objects, everyday objects, to the internet so that you can optimize, you can collect a lot of data, you can use it to function better, you can control the temperature of like your whole house when you're away, for example. And the second one is for the B2C market is crowdsourcing. So for example, we're working on, there's this thing that we're working on, it's a crowdsourcing delivery app. So I think taking advantage of the crowd is good, so that you don't have to waste or rather expend more expenses on hiring a fleet, for example. So supposing you are going back home and you are at Pavilion right now, and your neighbor is on this app and he wants a cha time or something, you can just buy it from wherever you are, which is in Pavilion, and send it back there, and he will pay you an extra 2 ringgit for it. I think that's an example of crowdsourcing, and I think it's up and coming. Again, a lot of research and development has been front-loaded in that. In terms of the B2B sector, I'm not too familiar with it, but I do believe that for I think clean energy is coming up. Yeah, but I'm not too familiar with the B2B sector.
Can't say let me think about what I'm going to say. So if you want to look at trends, seriously, to be honest, there's a lot of it online, right? You just go to Google again, type in, top trends, and you see a bunch of them. So I mean, but for you guys who are entrepreneurs, or if you're executives, it's really more so about looking at yourself and say, hey, what's my core sector skills? What's my core functional skills? What am I passionate about, and being driven by that, as opposed to being driven by, hey, the flavor of the month is this, I'm going to do this. If you're not passionate about it, when you hit something, that slows you down, you're going to sink, right? So, be driven more by what drives you, more so than, what somebody's writing about. But by that same token, I mean, okay, so you be aware of what's happening around you. Certain things, I mean, you see quite a growth of e-commerce now. There's a lot of e-commerce sites coming up. And if you're thinking of doing an e-commerce site now, to you, good luck, right? It's pretty hard. It's a real bloodbath. I think there's going to be, some interesting things happening. Because if you go in now, then, it's a little bit late. But having said that, if your core business, if you are in the distribution business, or you've got an existing, brick and mortar business, and you want to e-enable it, then yeah, it's a good time to be. Yeah. One way also is to kind of look at what's happening in other parts of the world, and then look at, hey, logic. If you kind of push the timelines a little bit further out, 2 years out, 3 years out, what works there may eventually work here. It's not a guarantee, but that's one way of looking at it, I guess. Yeah. And I'm also a big believer of when the B2C segment is doing very well. The e-commerce, for example, a lot of people are going to the e-commerce space, fine. Go one level lower, right? If you're during the gold rush, people, digging for gold, and, you're the one selling the pickaxes, and you're the one providing food and water to the miners, that's a pretty good place to be, right? So, go one level below, find out, the platforms and infrastructure they're using, and maybe you might have a more sustainable, reliable business model there.
Alright, so before we open up the floor to Q&A, I would like just to ask one last thing from you guys. So imagine our participants in the room today, they'll be approaching investors tomorrow. What is the one piece of advice you can give them before they go face to face with the investors? Would anyone like to start? Joshua, maybe?
Got to think about this one first.
Okay.
I mean, there's no NDA, Joshua, that's not Joshua. I think, I understand where you're coming from the no NDA. Maybe just to add on some perspective, I mean, I've also been the side where we approach investors as well, right? I think at the very base, you need to have a sexy pitch, right? A sexy pitch as in, not dress sexy lah, but as in a sexy story to tell. Short but simple, something that will kind of attract someone, the VC or the angel investor, say, hey, I want to know more about you know, what you're doing. And at that stage, and maybe slightly more, then if you ask for an NDA, then you may get it from VC. Then you may get it from angel. But if you balloon, right, you say, hey, I want an NDA. I'm like, screw you, man. You know, no, I mean, you know, your idea could be very similar to somebody else, but because I signed an NDA with you, I can't go and discuss, and that doesn't make sense. You know, so I think there's this time and a place for an NDA if you want it, right? And I think, you know, the VC and angel will appreciate that. So back to your question is what advice? I think be nice, be humble, right? I've met some people who come across as being really arrogant. They think they know their stuff really well. And even if you do, you know, don't love the action, you know? You know, and in many cases, sometimes it's, funny enough, it's always the action ones, right? That end up sometimes, you know, not knowing their stuff well. When you drill down further, they don't know the competitors well. You know, they don't have a strong team in place that can address gaps. So I think, yeah, be nice, be humble. You know, understand where you have gaps. You know, understand your strengths, understand your weaknesses. You know, the whole SWOT thing, right? SWOT analysis: strength, weakness, opportunities, threats. I think if you can cover these kind of basic stuff, then you're pretty good. Know what level you are at the product, of your product is. And I'm currently going through a process with a couple of startups where, you know, in the beginning, they sort of come across as, hey, you know, yeah, we're very excited, and they pitched a very sexy story. And then later when you go in, you find, hey, you know, the product is really not ready. And the kind of investment stage that I wanted to take them through, it won't work. Because they come in and then the VC will say, hey, you know, you're way too early for this, right? You need to go pre-seed. You know, so yeah, you know, and again, that's something for maybe for, you know, the investor, the angel to kind of suss out, you know, but from the investor's perspective, it's kind of good to know where you stand, what you need, right? You know, how much money you need, I think that helps as well. I think at some point after you discuss, then, you know, the VC, the investor will probably ask you, so how much money do you need and how much are you willing to give out? You know, so that's a big hodgepodge of different aspects that I just mentioned. But I think those are some important points.
Hello. Yeah. Maybe the first step is actually to meet them at the mamak store or dim sum store. Maybe the success rate will be higher. Okay, jokes aside, actually the two investments that I did earlier on, like I said, Redtone and also Carlys, I think I was lucky because I was courted upon. They came to me and said they wanted to buy a stake in my company. But having said that, recently with Off-Peak as well, we have actually gone out and looked for investors as well. And what I think really worked for us is we actually allocated a set of time first to gather information. Because if you haven't met an investor for the first time, like I think Hansen has shared earlier on, you don't know, you haven't perfected your pitch. Like dating a girl. The first girl that you date, you will improve over time. You get better at the second girl, and the third girl, and the fourth girl, or a guy. You know, you should get better over time. You know, but yeah, practice makes perfect. You see, so it's the same. You know, when you want to look for the investor and you have never done it before, this is your first time. You know, this is your V time. You know, so if this is your first time doing it, set aside a time. Like just say, okay, let's say we're going to spend 1 month and we're just going to go and visit all the investors and we're just going to touch base and see whether we can perfect our pitch, see what they have come back to us, what they have responded to us, and this is exactly what we have just done. Okay, and we have gone out to quite a number of investors and we did exactly the same. And if you know it's the same as dating a girl, that every investor that you see will want and will tell you different things. So at the end of the day, go out and just try to find as many investors as you can to meet. You know, you might not get it right the first time, you know, but as you move along and based on what they tell you and what they feedback from you, digest that information and then go out and then try to get that pitch perfected. And also the next most important, find the investor that is of the right investor for you. like I said, what do you believe in, and find that investor who believes the same thing of you. Because as you go out to see the investors, you can see 4 or 5, and I tell you, all investors work differently one. All investors like different thing one. Not everybody will like a James Bond movie, or not everybody will like a Star Wars movie, or not everybody likes a Jing Cha Time one. You know? So what you have to do is find that right investor. You will have that feeling. When you go out, like I said, you are all haven't put out the hand of going out to even find an investor. You know, but it's the same thing. Go out, get a feeler of that, set aside 2 months, 3 months, just go out and do it. Find your friends, find your friend's friend, find your uncle, find a person who has done it before, you know. Get them in touch with you to the investors. Get that feeling going around. Once you have that feeling, then the second stage will be a lot easier. Then you will be able to fine tune and say, okay, because like I said, you are evaluating them as much as they are evaluating you. Don't always look at it as though, when I look at the investor, right, the investor looking at me really. You are also evaluating them actually. It is actually a both party transaction. It's not a single jalan sehala way. I go and look for you, not like employer. When I go for interview, the employer is always looking, hey, whether you are good or not, whether you are good or not. It doesn't work that way. It's actually a two-party transaction. You are evaluating them as much as they are evaluating you. And the only way to know which investor is good for you is really just by going out to meet them. And when you meet a few of them, you will have that feeling. You will know it when you go out and meet them. So I think the best approach is set aside a time. Just say with you and your partner, set aside maybe a 1 month. Chinese New Year not so good, nobody around to meet you if you want to. Set aside maybe a 1 month period. Go out and just meet up with as many people as you want. Gather the information, crunch the information within your team, and then go out again with a more precise approach or more precise VC that you want to approach to. So that's my advice.
I think you can do a dating session. What you wish you knew about attracting dates.
Yeah, I pretty much agree with what they say. Present a full, complete story is important. I think I'll go back to my original slide saying that you have to sell 4 things: your product, your team, the market, and also how people can exit, and the kind of return they can get. These are the basic things you have to have if you want to, give the investor a chance to evaluate the company. Finding the right investors, you probably need to polish your pitch over time to perfect it. These are the points that the rest have touched on. Okay.
All right, and we are now open for questions. Any takers?
Hi. Actually, I've got quite a few questions. Hope you guys don't mind. Okay. So you guys get a lot of pitches, right? Hundreds, thousands. What makes a pitch stand out to you guys? We've covered what makes you instant reject a pitch, but what makes a pitch stand out to you guys in your email?
So, Lionel, you want to answer? Okay.
So I think when I think the answer to that is basically what we look for in an investment. So if the pitch contains information on the investment, that's exactly the same answer as what do we look for in an investment. We look for the team. Team is like usually number 1, and then is it a blue ocean market? We look for whether the idea has been done before, for example. So I think that's pretty much it. As long as the pitch is not like butt ugly or something, and it contains all the information over there, then it's basically an investment decision.
I personally will look at the team. The team is the most single important factor that, whether he or she can deliver. And of course, if that
he or she has a track record to deliver. Maybe you look at the product, the market, and the profitability. For angel investors, we are not looking at some of the angel investors are happy if you have 30-40% return. It doesn't have to be many X of returns. So the team for us, at least for me, is the most important factor.
So I think you mentioned about hundreds of pitches. I think if you're a very structured VC and you've got a very structured process of getting in pitches, then you probably get a lot. I don't know about Banyu. Banyu probably gets a few thousand, kind of pitches. I don't get. I get just occasional ones. And it's also the nature because we don't have the funnel. I personally don't have a funnel in place. I have, of course, connections with my advisory work and all that from Cradle through to Founder Institute or growth hacking groups. So occasionally they know there's a match. They say, hey Hanson, there's this guy who's doing this. I think there's a gap that they have that you can help. So that kind of thing. So when that comes through, it's kind of in a way already pre-qualified, or it's gone through some rationale or some logic, right? So I think when I look at that, hey, like what the fellow panelists said, there's the team is important. You look at the pitch deck that they send. It doesn't have to be a lot of pictures and all that kind of thing. But and this is where sometimes it's hard to say. Of course, good English helps. Or whatever language you choose. But most is generally English. Being very clear about what the pitch is about for the person writing it. Mentioning about a little bit about the product, enough to entice, but not spill the beans on everything. It's a hard thing to fully pin down.
Yeah, I've followed one seminar given by a very experienced VC from the States, from Silicon Valley, and he told us that in his 20 years experience, he has never seen a business plan fully executed to the end. And what really makes it happen is the people. And this is what startup to me is about. Whether the person can deliver. So I believe fully in that, the person.
It's fine. Hi, my name is Alan Chung from MovieGogo. Quick one. First of all, good stuff there. Seriously, I'm so glad I'm here tonight. So, second, what's your suggestions? As in, how soon or how early should entrepreneurs start approaching investors? Like what Banyu mentioned. Let's be honest, you can't date a girl without the right clothes or the right accessory, right? Some of us only had an idea. So, gotta make the first impression right. What's your thought on that? Thank you.
Are you above 16? Sorry, right?
For me, actually all the investments that I've made, somehow the earliest investment, the what we call the pre-seed stage, was actually done all by what we call the FAFA analogy, which is friends and family advancements. So most of the first round of investments that I've made or people have made, I've actually raised it through friends or families. And I think that would be the people that is the closest to you. Like you said, before you date a girl, you want to get some confidence. So the person that will give you the most confidence are your friends and family. Because no matter how not so good looking you are, they will still say you look very, very langsai. So for me, somehow the first round investments are usually my friends and family, and I would also advise you all to go ahead and do that. I was just talking to one of my ex-college mates just now, Shan, just behind you, and I told him why I decided to go with friends and family first as the first round of investment, because the amount of work and the amount of time that you take to approach investors would be almost similar whether it's a Series A or whether it's a pre-seed investment. And if you want to get something from them, you better, and if the time allocated is the same, then you better do it for a bigger amount. you know. And the first person that believes in you are usually your friends and families. And maybe Luke has a different business model, because this is the first time I've heard of a VC that's concentrating on the pre-seed side, which I'm really very happy, because it means that the industry is now growing and there is confidence in VCs, and they have the ability now to be able to get, or be able to strike an idea off from the bat, you know. But most of the time that might not happen, you know. So if you can't find that kind of friends and family, then I think nowadays there are avenues. Maybe NBAN would have an avenue for people like you, or maybe the investment VCs like Luke has an avenue for you. But previously it was very difficult, because when you are really off the bat, when you're really raw, when it's really your first time, there's a lot of people who just don't want to date you. Too much of burden, as they say, you know. So for me, that's my thought, you know. And I would say almost all 3 or 4 or even all 8, you know, of my ventures all starts that way. The first round of pre-seed money is always from the friends or family, or like I said, uncles or aunties, and then only the second round is from a proper VC or proper investors, and it allows you the speed of execution, and it allows you to spend your first, you know, 1 year or 8 months of your time, you know, to build the business rather than keep asking for money. It's a chicken and egg thing. You don't have a product. You go to the VC. It's very hard for them to buy an idea. It's not even asking for money. Even asking somebody to join you as a team member is already hard enough, just on an idea alone. What more trying to get money from a VC? You know, I find it so difficult. Even when I first start any business, it's so hard to even get somebody to work for you. You know, just with an idea. So imagine if you want to sell just an idea to a VC, it's going to be very difficult. So that's why, for me personally, the first round is what we call the FAFA analogy, which is friends and family advancements, if possible. Yeah. If not, then new avenues like what they have, what is being built up right now, crowdsourcing. I think NBAN. I think there's a lot of new VCs coming out that would be able to help you in that stage.
Your question is how early should you open up your company to share to investors, equity funding, right? Should you just open up so early, or should you?
Should you approach your investor, like, even if you just have an idea, that this is what I have, and this is what I can offer, and like, this is what I'm asking for, something like that?
Yeah, I think if you can convince people at that stage to invest, you know, why not? But usually that's very tough. And in Malaysia funding ecosystem, we have some grants available like Cradles. You know, if you can go those funds with no obligations to repay, zero cost of capital, that's the best. You know, I see a lot of university startups going into those funding, government funding, grant, commercialization, and they can use that money to sustain for a while, to at least make their first real money from the market. If you can wait, you know, to make your company more proven, or business idea more proven and more sustainable, the more you can delay, the better. Because in fact, if your business is successful, your share is, the equity financing is always the most expensive for the entrepreneurs. You know, if you can hold it back, you can delay that to a more mature stage, you can claim higher valuation. At this current stage, you know, you're going to sell your value, your share at a very low price. So if there's other source of funding like grant, you know, if you can, by all means. And of course, nowadays, government has also implemented equity crowdfunding. It's going to come into Malaysia this year, you know. But that again is equity financing. Yeah. So if I were you and I can make money, some money back from the market to sustain my operation, I would want to grow it to a level where I want to sell for something bigger rather than at a very early stage. That's my thinking on your question. I mean,
again, with a startup that you want to build or a business that you want to build, I think also I ask, what's your end goal? Is it you want to build it so that you want to it's a lifestyle business for you, it's a lifestyle profession, in which case then you want to quickly be able to generate revenue so that it can run on its own. If you're just building a company to get a whole bunch of users to flog it off, right, later on, then that's a different model altogether. You're not going to get any money in the beginning, you're just building a whole bunch of users and traffic and eyeballs. So how you fund it is different. The other thing also is that I think you also need to kind of, all of us, we look at ourselves and say, okay, hey, so what do we bring to the table? Do we have a lot of experience, functional experience or industry experience? Have we done startups before? Have we failed before? Have we done well before? And it's a bit of a curve, right? The less experience you have, the more you give up, right? So for example, if you've already done, say, like 10 startups, right, and you've IPO'd 2 or something like that, right, you don't have to worry too much about getting money. People will start throwing money at you, right? Even if on an idea, you're like, you can have mamak sessions and somebody just throw money at you even before the drink arrives. It's possible. But if you're very new at it and you just got an idea and you have no track record, then like what Luke mentioned, I think it's a case of and also Manu, the friends, family. There's a different version, which is the 3 F's are friends, family, and fools, right? And it also validates that hey, you've actually gotten some money from them. You've been able to build something, right? Which also is a question. It's like, so if you're gonna try and get money, show that you can build something, the MVP, minimum viable product or minimum viable service. So that helps. But I think for startups, I think the goal shouldn't be going out, to get money. That's the wrong goal, So it's like, I got investment. It's like, that's not the goal. The goal is to build something sustainable, right? Yeah, and if you can, keep as much as you can, yeah.
So do we have one next question?
Hello, my name is Ariba, and my question is, I'm curious about when you talk about the team, like what kind of how can you tell if a team can deliver, and what kind of qualification or achievement that you tend to go for?
Yeah, I would say a proven track record will be something very, very useful. If you have proven to have successfully build up a business and then make things happen, that will be a big plus for angels to experiment with these entrepreneurs again. Of course, we also look at genuineness of the person. We would like to know through his contacts, what kind of person he is. It's very important. You don't want to park your money with someone who is not genuine. The ability to deliver results and the genuineness is really what we think is very important for angel investors.
I think in terms of track record, yes, that's really important. So from my experience investing directly in and working with about 100 startups in Australia, the best ones tend to be those that actually exited before. They've done a startup and they exited. And the second best ones are those that did a startup and then they failed. But then the subsequent one, they learn from the mistakes. So track record in terms of past startups is good. But another really important one is the balance of the team. So there has to be someone that does technical stuff, the business stuff, the design, getting into the heads of the users, the customers, understanding exactly what they want. And specifically for the business development part, the ones that tend to do really well are those business development officers or executives who have a lot of experience in that particular industry, specifically for the business development ones. For the technical and the technical side, we tend to look at what they've done before, so portfolio-wise, yeah.
Yeah, I think what has been mentioned is really relevant, especially when you're building a team. Don't build a team that is all of a certain type of skill set, because you don't have diversity at the time. So the first thing probably somebody will look at is whether you have all your bases covered or not, whether you have somebody in operations, whether you have somebody in business development, maybe you got somebody, if you are a very marketing type of business, maybe you have somebody in marketing. You need to be able to have a combination of these team members, and then that will make you, number one, a lot more attractive because they know that at least everybody is covering all bases. Number two, you get diversification of thoughts. If you sit with a bunch of IT person and they build a user interface, 5%, all the IT person says very nice. But the one person that walks into the room, which is the end user, will say, how do I use it? And then the IT person will say, no, you have to click this and click this, so easy, so simple. So when you build a team of similar thinking or mentality, you lose the diversification. And that is very important in the startup. You need to be able to be very open with each other. And there'll be a lot of fighting that will definitely happen. But at least there is people that will play what we call devil's advocate along the way. And you really need that kind of contribution from your team members to actually it's not that because I built a business, wow, everybody's happy, then it's a good business. It's not that way, It is a good business if you can convince everybody with have diversified background to believe in the same product. The second thing that I've learned from everybody is when you don't have like just say referrals, or you don't have if you are really purely starting up. I mean, I've gone through a business where I was purely starting up. At that time, I was selling internet services. I was up against TM. That was my first business. And I was selling internet at, you won't believe the rates. It was like 2,500 ringgit a month for 2 meg of internet connection. But at that time, if you can guarantee somebody 2 meg of internet connection at a 99.9% just say uptime rate, they are more than willing to buy it from you. And I remember what my first customer said. I'm actually not sure whether you are going to guarantee me that, but because you talk with so much conviction and so much passion, I choose to believe you. So that I think is the most important, especially when you don't have like a resume to back you up. You haven't done any business before. You don't have a co-founder or a founder who has been in multiple business before. When you talk to somebody, they can actually, we can actually see in your eyes. When you talk to somebody, how passionate you are about the business. I've talked to some VCs, the moment they tell you about an idea, and you tell them something slightly off the idea, and you give them a suggestion, you just tell them, maybe this one is not so good. Immediately, they get defensive. Then these are the kind of people that we don't want. These are the kind of people that immediately you will find a gap between them. So if you have the conviction and you really believe in your business, it should actually show when you make a pitch. It should be able to show in your eyes. I'm not going to say that you put a mirror and then you talk to yourself and then you see it. It's something that's very subjective. It's very hard to describe. But I think everybody or every VCs or every investors, when they have met many people, they have built that mechanism inside because they've seen so many people. And that is what you, or maybe answering another question as well, how you can actually shine yourself from the rest of the other people is the ability and the passion that you have for your business, that you are really convicted to it. People can actually see that. It's like people say, I can sense fear. What is sensing fear? You're not like shivering or anything. I can sense it because I can see it in your eyes. Basically, that's what it is. So when you go out and you make a pitch to somebody, make sure that number one, your team is solid. And how to make sure your team is solid? It's very simple. When you make a pitch to anybody and when you make a presentation, they can actually feel that from you. How convicted, how passionate, how much you know about the business, how much you're willing to learn, how well and how good you want to do this. They can actually feel your desire, so to say. So that's how I think it is.
Sorry, that's that gentleman behind there.
Have you guys, or what are your thoughts on using safe agreements, the Y Combinator safe agreements, or do you still prefer using convertible notes with interest or expiry dates on them, or have you tried using safes? Like safe is a Y Combinator tool, right? Simple agreement for future equity. Have you heard of it?
Can you explain, elaborate on that, please?
Okay, in a nutshell, a convertible note has an expiry date, okay, where the startup has to raise funds by a certain date. Okay, there's also an interest component. What Y Combinator did was they created a tool called a SAFE to bypass those two things. So the startup is not forced to raise capital by a certain date. Have you explored that information?
No.
Would you be willing to do that as investors?
It depends on the ecosystem as well, because like we can't be doing something if everyone else doesn't even understand what it is. So I think I just got back literally 2 weeks ago, so I'm very familiar with convertible notes. And as Hansen alluded to just now, I don't think it's very widely used over here, but we are using it for our fund. So I think it's a really good tool, the convertible note. As for the safe note, it has to be, I guess it has to be a sort of a stage above the convertible note, and that probably would come down the line sometime when the ecosystem matures more. But that does sound awesome though. That safe note does sound awesome, because you don't want to force a startup to go and raise another round when they're not ready. So I think I should mention that the core purpose of the business is to create value, right? And fundraising is like more than a full-time job. And it really retards the ability of the entire founding team, especially if it's a small founding team. It really slows down their progress in terms of like building product, shipping it out, distribution, whatnot. So I think that's awesome. Probably look into that.
I think there's another question on the side of the hall.
Hi, my name is Feng. I got a question. So a lot of people are talking about startup. There are kind of like two types. So one is painkiller type. The other one is kind of like vitamin type. So and a lot of advice that we're looking online, we're reading on articles. They're talking about, you know, one is build a startup is a painkiller. You want to build startup like your vitamin. So what's your take on that? Will you invest in a vitamin startup? Thank you.
So I think have you heard of this guy called Peter Thiel? You should read his book 0 to 1. It's exactly that. So just to I think give a bit of background on vitamins and painkillers. Painkillers, basically the solution that a painkiller startup seeks to produce is something to basically kill the, like, soothe the pain of a really like pressing problem. For example, if you can solve the traffic jams in KL, that is like epic. That's an epic pain for me. And for a vitamin sort of startup, an example would be another MyTaxi, which is lower rates and maybe a bit more comfortable. So that's like an incremental, not a quantum leap, rather just a quantitative leap, just a bit better, like marginally. So I think in general, if you exclude every other factor, we always look for quantum leaps. We always look for painkillers, but that's of course excluding that's of course excluding the teams and everything. And the logic for that is because statistically speaking, say 9 out of 10 startups fail, and you want to invest in something that's going to be like 10x, meaning 10 times more than you invest in, or 100x. And that usually comes about as a painkiller, so I hope that addresses your question.
I think we are... Yep, we still have time for one more.
Okay, thanks. So, slightly related to the previous question, do all angel investors look for opportunities for exponential growth, or are they willing to consider pitches which target linear growth? So does everybody look for 10x returns, 100x returns, or do you guys consider pitches where they tell you you'll get 50 to 100% on your investment?
I think from my crowd perspective, we also look at linear growth. The reason why we look for exponential growth is the fatality rate is too high, you know. So, you know, maybe one one investment out of 10 will die. So, so we average it out. So it has to be higher than, 50% return. So if you take 1 out of 10, will succeed. So if 50% in one, so I will look for 5 times, so that when the rest fail, I still have one that can recover the 50% return. But when we, that's how we, I think for my club at least, we also look at linear growth, yeah. But I don't know about.
No, you're right. So that's very, very, very investor specific, because some investors are less sophisticated than the others, and they've perhaps had more experience in traditional businesses where they can add more value to the business, which is a linear growth business. Whereas other people, they look at global statistics and say, okay, 9 out of 10 fail, let me just invest in all of those that have the potential to go 100 or 1000x. So it's, again, like, depends on the investor. But I think in the Malaysian context, there would be quite a few angels that invest in linear, just purely looking at the maturity of the ecosystem over here, because it's so far been semi-traditional and semi-technical.
I've got a question, which backs to you. Are you asking it from an entrepreneur, business owner perspective, or are you asking it from an investor perspective?
Actually, I'm from an NGO. We are looking to launch a social enterprise to support our social cause.
Okay.
So, as a business owner.
Okay. I guess the reason I'm asking is that, I mean, if you take off the investor hat and you put on entrepreneur hat, and if you're playing in, example, and I could be wrong, please chip in as well. If you're playing in the internet space, the consumer internet space, generally with consumer internet, for example, with e-commerce, right, and speaking very generically, right, the number one player will get most of the traffic, the number two player will get a decent amount of traffic and revenues, the third and fourth, it tapers off very fast, right? And so there's a certain logic and rationale why you need that kind of exponential growth and all that. But if you're in a business which is, more sort of traditional, you're not in consumer internet space, then yeah, that's okay. And there's logic for why you can be very sustainable, and if the investor fits, that's fine. But if you're in the consumer internet space, and you're telling me that you're looking for a very linear, kind of very stable growth, then I think I probably wouldn't touch because it's not aligned.
Alright, unfortunately we have no more time for questions, so that is it for the panel questions. If you guys have any questions you would like to ask, please hang around, you can ask the panelists yourselves after this. So to end tonight's session, please give it up for our panelists and welcome Ari to do the closing.